would love to understand the gap in the market that you're addressing and maybe what didn't exist, why it didn't exist before. Because you're addressing this SME market, as I understand, 10 to 250 employees across, several sectors. When you started this company, I think around 21, 22, um, what did you notice that was missing?
I started the company already back in 18, but then we spent a couple of years getting the actual bank license. So we actually started from reverse. Most people start with customers and maybe a small payment license or something like that. We started from doing heavy lifting from day one. So we went for the bank license. So we actually, and then you're absolutely right. We started to conduct business from late 21. Actually, mostly we say 1st of January 22 was the cutoff date that we actually started doing sort of real customer business.
Hmm.
And the thing that was missing is something that I believe has been the case for a long time, not just in Denmark, but really across many jurisdictions and geographies, that the SME space is very overlooked and very neglected, not because the banks don't want to or because they don't like it, and not necessarily. I mean, everybody loves local businesses that creates a ton of jobs, a ton of innovation, a lot of local community value is being added. But the problem, which is I think is both a reasonable and fair assessment from the incumbent banks, was look, we can't group SMEs together like we can retail. So
Hmm.
the risk modeling is different, the pricing is different. We can't make enough money on everyone so that we will service them the way we do large corporates, where we can actually, we can allocate a team, we can allocate risk parameters, we can allocate product innovation, we can allocate these things. That's not really possible for an SME, where the earnings per customer is not cannot justify those types of investments. And when you can't group it together like you can in retail, then you're kind of stuck with, should I then do it? Because it's the economics are difficult. And I actually think that's a very valid and reasonable question. And most incumbent banks, not just in Denmark and Scandinavia, but actually across Europe and in fact in the United States, have actually come to the conclusion that, yeah, we'll service them if it's very easy or it's very simple and the requirements are not too big.
Hmm.
That's where we thought, well, actually, if we can create a way to service these customers in a way that they feel is appropriate, um, with the feel like it's an iPhone or the feel like it's a new technology, then you'll probably be able to price yourself accordingly, and then you will have your way through. You have a go to market that actually resonates with customers, and that's why we started with the customer to
Hmm.
find out what do they need. And then we were sort of calculating back from there until we figured out, okay, in order to give them what they want, which is a combination of digital online self-service, but also from time to time the ability to meet with a physical human being so that we get, a real conversation. Because some of the stuff that they're doing is a big investment for them. Like taking out a loan of 1 million euros, 2 million euros, that's a big ticket item for an SME.
Mm.
So sometimes they need that comfortness. But in order for us to be able to afford that and not get caught in the same trap as all the incumbents, we needed to go all the way back and start with first principles around how do we build a bank that has such high compliance and quality and security and performance, but at the same time so cheap and so fast that we can afford to invest what we need to be able to differentiate ourselves towards the customer.
Hmm.
So we started from the customer and calculated all the way back, and then we need to start from scratch. That's a long
Hmm.
explanation. I'm sorry about that, but that's the way it started.
Well, I imagine the user experience has to be extremely simple and easy for some of these target customers. Say if you have a founder or owner of a manufacturing business, um, what's the first kind of approach to them? How do you get them started using your services? Is it a simple deposit account? Is it a loan?
So it's actually divided around 80-20. So 20% is inbound, so they somehow heard of us and they reach out themselves to either build an account, open an account, or get some form of a credit or financing, overdraft facilities, payment services, foreign exchange, leasing, whatever it is that they reach out for. The other 80%, we actually engage them through our own application. We build an AI-driven lead generator, which basically scans every company in Denmark on a daily basis, and then it creates a funnel where we adjust the appropriate companies according to different metrics, and then in the end we come out with what we call high probability customers, which means we have a high conviction that if we reach out to these people, they will be in need of our services, and there is a high probability that we can close one or more deals. And the way to do that with a high conviction, with a high probability of closing, is that we need to make sure that the filtering process is done in a very systematic and very repeatable way, so that we don't just hit it right once, but we can continue to produce that pipeline of potential customers through AI applications, that we can then reach out to and give them the service that we actually think they deserve and that what they're looking for. So that's the two approaches. So inbound and outbound. The outbound is very driven by AI, our own AI application and screening process. And then it's a matter of understanding and listening to that customer, saying what exactly is it that you're trying to achieve in the next 12 to 24 months, and would there be somehow we can help you achieve your goals, which is I think that again is a different approach than you would see most other banks. Most other incumbent banks are very reactive, so they wait for the customer to engage with them, and then from there they would then provide them with a good and reasonable service. It might be slow, and it may also be a little bit expensive from time to time, but it would not be a bad service. It will be a fine and perfectly acceptable. It's just not to the level that some of these SMEs expect, because we are living in a time and where I think the old time is money, and if you don't get your stuff sorted out fairly quickly, you may run into competitive issues. So we actually think ourselves as being a growth enabler, as someone who can help European SMEs regain or maintain their competitive edge, which most of them or many of them are at a constant fear of losing. I mean, why wouldn't you? I mean, you should always be alert on that stuff, right?
So you're offering a better experience. It sounds like you're providing some maybe thought leadership around what this business could do by using your financial services. Do you also compete on price because you have a lower cost structure? You can then extend, maybe lower rates to your customers?
Yeah, we might, in theory, be able to do that. In reality, we don't, from a lending perspective, and I'll explain why. We think, from a broad-based perspective, that some of these SMEs they are mismanaged, because the banks are seeing different business cycles. I'm sorry if this goes a little bit technical, but I'm trying to give you the explanation why the pricing structure is what it is. So SMEs run in cycles, like the economy in general. And when you have what we call through the cycle risk, that means the low end of the cycle, obviously defaults and losses will increase. And in order to pay for that, you need to have a price in the good times that will make up for those losses. What we are seeing from time to time, and it's a very common issue across many jurisdictions, is that the banks will price the SMEs lower in good times, that means taking too much risk at a too low price, in my opinion. But then in the bad times, they will pull the funding.
Mm.
And that means that you're basically selling an umbrella that you need back when it starts to rain, which is that's not really cool when you're an SME. You kind of need it at that point. Mm-hmm. So what we are trying to achieve is to say, look, what we will promise you as kompasbank, we promise you that we will be there when it rains and when it shines. Mm. And in order to do that, we need to make a viable economic business. That means that when some of the others are, in our opinion, mispricing customers a little bit in good times and super overpricing them in bad times, we like to keep a little bit more steady state so they know that there's a higher visibility, there's a higher predictability. Mm-hmm. And that is what we're trying to achieve. So in fact, yes, in theory, you are right. We could lower our prices to match the margins that others have. But in fact, we have a higher margin, but lower same or lower risk, because we tend to look at it from a more holistic perspective, that we need to be able to support these customers also when times are tough. Mm-hmm. And from a business perspective, I mean, we're responsible to our shareholders and then to the community and to regulators. We need to make sure that we do this correctly, right? So there is this balance is difficult. Mm-hmm. And then when it comes to payments and foreign exchange, our technology enables us to price much lower. And for those products, we do.
Mm-hmm. And I believe you've raised some capital. Are these investors that you have, are they from also the Nordic region?
Yeah, we're very fortunate to have raised capital from our investors. We're very grateful for that. Super supportive, quite bright people. And they are, I'm happy to say, from pretty much all over the world. Okay. It's not just, we do have, I would say a majority is from Scandinavia. Mm-hmm. But we do have, all the way down the European corridor from Germany, Holland, Spain, France, etc., all the way over to England. We do have in Asia, we have in the United States. So we actually do have an investor base that is fairly broad, which actually makes investor calls on video quite tricky, because you're needing 3 or 4 time zones to collide, to somehow. So that can sometimes be a little tricky, that people have to get up at either 6 a.m. or staying up till after midnight to be on an investor call to accommodate. But big problems.
Yeah. Can you give us a sense for the scale of the business currently? And you can use whatever metrics you're comfortable with.
Yeah. So, I mean, I think we're very likely, given where we are at the moment, we will probably double our customer intake this year. We have the core business is profitable. That means our lending business is profitable. Mm-hmm. Of course, something that we're both happy and proud of. It's not that simple to build a neobank from scratch and then moving it all the way to profitability in the time frame we've been trying to do it in. Mm-hmm. So we're happy about that. The business as a whole is still burning a little bit of money, because we made some major investments into payments and other new products, which we are actually launching as we speak. I mean, I think we are piloting our first customers right now. So I have very high hopes for that in the next weeks and months. And the size of the business, we are 65 people at the moment, plus some part-time employees. So headcount is probably total around 80. Mm-hmm. I'm pretty confident that we are in a good place.